So welcome back. We're continuing this series of getting your ducks in a row. And today we're going to talk about finances and taxes. So we'll get started and I will share the screen. So as usual, we start with the first document, the DocuFind. And on here, it's the same process with going through the list. There's 2 pages on this one, and then of course, there's more room for you to add. So in the finance category, you go through the list, and anything that doesn't apply to you, you just would hit NA for not applicable. Anything that you're currently working on or looking for would be under the P category for pending. And if you have it in place and complete, you check complete, and then you fill in the location where that is located. So just going to review here some of the things on this list. So again, we do the DocuFind, the special instructions, but here we have things like assets. You know, do you own some sort of business or have some sort of interest in a business? And are there documents and paperwork that accompany that? A list of your bank accounts, the beneficiaries for different accounts or policies, you know, making sure that that's all up to date. That's something that should be reviewed very clearly. I know that there are certain circumstances when, in particular, when people have been divorced and they forget to change beneficiaries and someone passes away and everything goes to an ex-spouse instead of a current spouse or other family members. So everybody wants to make sure they're up on that. We're going to talk about listing bills and payments, you know, your credit cards and debit cards, credit reports. So we are entitled from the 3 credit agencies, Experian, TransUnion, and Equifax. We're allowed to get a free report every year. If you have any deeds on property, we're going to have an expense tracking sheet. And then checking on your FICO score. So this is the score that lenders use to determine if you're a good investment or you're a risk for investments or for loans or things like that. So you want to really work to make sure that your FICO score is in good shape. And there are things that you can do to improve your FICO score. You want to keep track of any improvements that are done on your home or your property, any investment or retirement accounts. These would be like 401ks, IRAs, Roth IRAs, things like that. Are there land surveys or leases, loans, any mortgage documents, pension plans, promissory notes, property ownership documents, property tax bills, receipts. Do you have a safe deposit box? As well as a safe deposit box in a bank, or do you have a safe in your home or somewhere else? Social Security statement, again, that's comes annually. Any stock certificates, bonds, or CDs. Stock certificates are almost non-existent, and some, you know, to have a paper certificate is something that if you do have, you want to go to your to an investment person and see if those have any value anymore. Title insurance, anything about your vehicles, we're classifying under finance. So leases or loans, license plate, record of the number, photos of the vehicle, vehicle prepaid maintenance plans. Sometimes people have any, your information about registration, service history, your title, and any vehicle warranties. So the whole vehicle thing we have under the finance because that is an asset. Okay, so next, of course, there's the special instructions form if you have anything you want to communicate about your financial situation. This is a document that you can use for that. And now we're going to get into bank accounts. So it's a good idea to have a, one location where you're listing the name of the bank, the account, the type, is it savings, money market, checking account, anything like that. So you would put the type of account. And then if you have a banker that you use regularly, if there's a specific person, you can put their information, the address of the bank, and the website if they have it. And then if you have any sort of PIN number or anything that you're trying to keep track of associated with that account. Now, mind you, remember, this is very, very delicate information that you do not want everybody to see or to have. So these things have to be kept secure, and that only the people that you want to see this information actually can see it, actually can view it. So a trusted representative of some sort. Now here's a similar list, but this is a list of who you pay bills to. So do you have, your electric bill, your gas bill, your water bill, your rent or a mortgage payment, anything like that, that you pay, a credit card, payment. So again, the name of the company, or if you're paying a particular person, an account number, again, what type is it, phone, address, what is the average monthly payment? Is there a particular due date? And if there's any sort of number associated with the account, other than the account number. And so by keeping track of these things, in the event that you move, you've got everything all in one place. You don't have to go search or think about, what am I, who else do I need to contact? You've got everything right here, and easy to record, the current, and if there's a change, easy to make a change on this type of form. And jump in if there are any questions. So here it's a similar form again, and this is about any kind of investments that you have. So this is where you would put, say if your company offers a 401k, and you would put the information just like you would for any of the other accounts here. So if you have stocks, if you have any type of investments at all, you would list them separately on this sheet. So here, if you have a safe deposit box with a bank or a trust company, you want to make sure you have all the information about this safe deposit box. So whose name is, who's the main person on the safe deposit box? Is that you, right? So you put your name, and then put the date that you're filling this out, so that this is the date that they know that information was accurate. So your name, and you can put here, this is your name, your address, your phone, your email. But now you're going to put the name of the institution where the box is located, the address, the phone, a contact person, the safe deposit box number, the amount of keys there are, where are the keys located, and who are the authorized signers to get in and out of that box. One of the things that people make a big mistake on is they put their original will in a safe deposit box. You never, ever, ever want to do that. You can put a copy in there, but you don't want your original will in there. When someone passes away, the banks are keeping track of the death records, and so they will immediately seal a box, and you or your family will not have access to this box. So any original documents that would be needed after death are, you can't get to them. Some people put money, cash in them and all sorts of things that if you need it immediately after the death of the person who owns the box, that do not keep them in here. That is not where you want things stored. Any questions about safe deposit box?
Even if you've listed your family that they have access to the box?
Nope, the box will be locked.
Let them in?
No, they won't. Upon death, yeah, and every bank is different too. I mean, you've got to go, and then state regulations are different. So what I would do is I would go to your bank and I would say, what's the whole criteria? If I die and I have a safe deposit box and I have other authorized signers on that box, how is it managed? So you make sure that you have it set up exactly the way that bank and the state regulations are for the state of Colorado or wherever that box is. So I would not leave this to, just, okay, this is just, I'll take care of this form and that's it. I would have a conversation with the bank, make sure there's very clear understanding about all sets of circumstances. And they probably have a document they can give you too with their regs, regulations on that.
Thank you.
But yeah, never take anything for granted. And there's, as we all know, laws change and circumstances change. So I would do that every so often. I would check in with them. If you have a safe in your home, again, this somebody needs to know how to get into that safe. So again, I would put everything about the owner of that safe, where is it located, and I would also put the company it's purchased from. If there is an issue with the opening of that safe, the keys are lost, combinations lost, whatever happens, the company that it was purchased from and the contact information, if possible, is great to have because they would be able to help you with that. And safes too are, it's good to become educated about a safe. If you choose to buy a safe to keep these records and documents in as well as any other valuables that you have, it's important to understand the different characteristics of a safe. There are the fire characteristics, the heat tolerance that the safe has, the water situation, all of the different factors. I think there's 4 different ratings for a top safe. So you want to make sure that, if you're getting something, you're getting the product that you want to have. So you're aware of all the different circumstances that come with the purchase of a safe. So that's pretty much it for the finances. The financial piece of it is it's actually a fair amount of work to go back and to take care of all of those different lists that you need to have. You want to make sure that also if you are doing online banking, stop the share for a minute. If you're doing online banking, that you make sure that as we had in the identification records, we had that password list. You want to make sure that all your passwords are completely listed with the information somewhere, and it's somewhere protected, where they're able to access online accounts, online documents. So if you're paying bills online, if you're managing different accounts for different bills in terms of, I'm not talking about payment, but let's just say for your cable bill, you want to add another authorized person, right? How do you do that? You're leaving the information about the various accounts, but also instructions too, as far as, is there someone else named on the account? So what happens many times is as we age and maybe are in circumstances, whether it's incapacity or desire, the desire is lost to manage a lot of this for some people, and they like to be able to turn it over to either a trusted person within their family, but there are also people that can be hired. There are fiduciaries, daily money managers, different accounting companies have specialists within them that manage people's bills and things like that. So there may be a time when you are electronically authorizing another person to have access and decision-making power over a particular account. So if you do that, you want to document that when you're documenting information about that account. If you don't, you also want to document that too and say, I am the only person with access, or it's me plus my husband or my spouse or my, you know, a sibling or whoever that is that trusted representative that you have. You want to make it clear as to what the path is. So if you're not able to do something on particular accounts, and they could be for some reason different people, because maybe someone has a greater expertise in an area than another member of your family or people that are hired or whatever have. So just be very clear about each individual account and what the circumstances are for that account. If it's a strictly, you know, a paper situation, or is it an online situation, and what are all the mechanisms to get to that account, and then the trusted representatives for that account. So any questions on the financial piece of it? Okay, so let's move on. So we're going to talk about taxes, and taxes are, people who have some strange ideas about the length of time you need to keep taxes. And so again, that section of taxes, we'll start with the DocuFind, and we'll talk about current tax receipts, current tax returns, and then previous tax returns. So in current tax receipts, this is where we're basically saying that if you're using a binder system or a folder system, set up, you know, either a sheet protector or a folder that would say the year and the current tax, you know, current tax receipts and that year. So 2019 current tax receipts, and that's where you would be depositing throughout the year those receipts. That's what you're going to need to file your income tax in 2020 for your 2019 tax year. So you want to just keep those separate, that there's one place that those get put every time. You know there's a home for it. And that's the whole idea of this whole process, that every single thing has a very particular home and you know exactly where that home is. So you want to maintain all the receipts that are necessary based on your set of circumstances. So I'm not advising you on what those are. I'm just saying whatever, and you need to talk to a tax professional if you don't know what that should be. And then your current tax return is obviously the one that's being worked on for a particular year. So 2019 will be the current tax return. Once we get into doing that, we start collecting things also that are necessary at the beginning of 2020 to be filed in April. So those tax receipts and that current tax return should, you know, everything that's needed, those forms or whatever's needed, or if you're doing it online, where is the location of what you're using, whether it's particular software or whatever for that tax return. So you want to keep everything together in one spot, and that way you're really on top of it, and you're not hunting for things throughout, you know, at the last minute. Throughout the year, you're just always maintaining, is this something I need for my taxes, like medical receipts or whatever those receipts may be. Now the previous tax returns, this is where people get confused. Some people think it's 7 years, some people think it's forever. I mean, there's all different sets of beliefs about the tax returns. The fact of the matter is you can go to irs.gov and you can look and see what they're recommending. They actually recommend like you're holding those previous tax returns for 3 years, but there's a stipulation that so previous tax returns 3 years plus current year. But there's a stipulation where they're saying if you have a very robust or confusing tax return, but meaning like there's a lot to it, you may then they're pulling in that 7-year time frame, which would mean current return plus I think it's 6 previous. So I think you're safe in keeping that 7 years is more than enough and very safe to keep that amount. If you have very average situation in terms of your taxes, there's nothing complex about it. You can go ahead and dispose of those records. If you're doing it electronically, then it's not a big deal. But if you're keeping paper, you don't need to keep the paper for a long period of time. So I would recommend that you get advice based on your set of circumstances from a tax professional and ask them, how long under my set of circumstances, do I really need to keep this stuff? Because this excessive amount of paper that many, many people keep is just not necessary. And again, you would have any special instructions if there were about your tax situation that you would be keeping. And when we think about using this system as a communication device. So, this got out of order. So that's really it for the taxes. But I want to go back here and I want to talk about expense tracking. So what we're going to talk about here is if you really want to get on top of your budget, we're going to look at a couple of documents that will really help you do this. This is where, so when I said on the other document about listing what your bills are, right? Here are the money that goes out, right? What expenses are you paying? And here's just, you'll be getting this form. So here's a list of maybe potential bills. I just made these up. And I tried to consider people in different parts of the country. So like I put pool for somewhere where it's hot, or, so you just would eliminate the ones that don't apply to you, and you would change it to the things that are your bills, the things that you pay money out for. And then down here, it lists where does money come in from? So you'd list whatever means money comes in from on this as well. So you'd go January through December. So you can even go back and you can look at 2019, and you can do one of these sheets per year. And then you can come up with your total. So how much did you spend on each thing? And this particular form, if you have Excel and you can do this, you go down here to the very bottom, to where is total. So here it says total, and then this one says total. So the total of all of these going across, you can also do that, and you hit, I'm going to show here. Yeah. And see this little character here, this means sum, right? So it will add it all up for you. So you can go all the way across here to the total and hit sum for each line. And then you can go all the way down to the total and hit sum. And you'll get the exact amount that you spent on all your bills So everything that you spent in total for your mortgage, and then at the bottom here, when you end up across from this total, right, you'll get the complete total of every single solitary thing that you spent over the course of a year. And then you can average those, you know, so you can divide by 12 of all of these different payments, and you kind of then have an idea. So the payments that vary, that, oh, I spend, you know, $100 a month on my electric and gas based on the average. So this is really handy if you really want to understand what you're spending and how, you know, that works with your finding, you know, your intake. I'm going to show you now how that works. So once you have these amounts and these numbers, we're going to go to something here. And this, can you see this clearly, or is it not big enough?
That's good. Can everybody see? Yeah.
Yeah, okay, good. So this is the best budgeting thing I've ever encountered. It is absolutely extraordinary. And I want to run you through this and show you. So you'd use that other form and do, you know, you can copy right onto this. And so all your expenses are listed here, but now you're going to categorize them. So those monthly averages I told you to collect, you're going to look at all the monthly averages and insert them here. So your mortgage or your rent or whatever, that might be the same all the time. So that one's not an average, that's just what it is. But then other things, your car payment or your, you know, whatever it is, auto maintenance, things like that may vary. So you'd put the average. So what you do is you take your take-home pay and you divide it. So let's just make believe a monthly take-home pay is $1,000. So you would take the $1,000, and so that's take-home. That's after you've paid your taxes and everything else you pay into. It's the actual amount that your paycheck is, or your Social Security check, or whatever it is, how money comes in. You take that amount and you look at what is 50% of it. So we make believe here that we're taking $1,000 a month home, and so we're going to put $500 would be the must-haves. So 50% of that take home. So everything on here that's a must. In other words, there's no way to cancel it. You have to pay it. So you have to pay your rent or your mortgage. You have to pay your utilities. But you don't have to pay, and I just put in crazy things here. Like if you have a landscaper, you don't have to pay a landscaper. You can fire a landscaper and say, I can't do that anymore. Or you can cut back on your food bill and drop the average, whatever that is. So maybe you don't get your hair cut as often, things like that. So the point is if you lost your job, 50%, so the mandatory things that you could not get out of would be your must-haves. These are the needs that you have to live. So then you look at 30%. So let's just say as a woman, you go and you get your nails done every 2 weeks. That's a want. That is not a necessity. It's if you lost your job, you could stop doing that. So that amount, 30% of that take home, you know, so that would be $300, you would be allowed in total for anything in this category. Now, this is a really tough thing to do. Here it's saying 20% savings, and that is not easy for anybody. 10% is not easy. It's challenging. But if you do this, or if you at least advise your children or grandchildren to start with this budgeting, they will never be without money. It will last them their entire life. So if they can hit that 20% savings, and that includes what's being taken out of your 401k or anything that's deducted from pay, that includes that amount as well. So the idea is it's a 50, 30, 20. And when you do this analysis, like if you do this with your current bills and you say, oh my gosh, I have like 90% are in the needs category. Nothing's getting saved, and I have very few in the wants, 10%. And you're not, it's not in that balance. That's a goal to try to get to. So to try to figure out, so when my children were got their jobs, they graduated college and they went out on their own, they asked me, how much rent can I afford? How much, they were trying to figure out, how do you balance this? So we looked at mortgage and rent in the same way, where it's about it should be about 25% of your take-home pay. And that is what happened, where all the crashes with the loans, the mortgages, with the housing market went awry, was because banks were loaning money in extremely high percentages of people's take-home pay that they could not keep up with. So therefore, you had a lot of issues with that. So banks, realtors, mortgage companies always are advising much, much higher than really anybody should be in terms of their expenses for their mortgage or their rent. And therefore, it makes it difficult to do things like eat, and take care of all the other needs that we have. So this is a really interesting exercise to do, to list your expenses, see if you can come up based on that other sheet that I showed you, come up with your monthly averages, and then take a look at your take home, what amount of money comes in, and then does it fall into this category? For those who are retired, obviously it's very different. Social Security or a pension or whatever typically doesn't work in this. This is for people who are gainfully employed, and it's not for certain circumstances in life. It's very difficult to accomplish this when you're just starting out brand new, and also when you're later in life in retirement. But in the full work life of, say, 30 to 40 years of the average American, this would be a great plan to follow. And then you work towards. And with the savings, the idea of the high savings is that you're looking down here, so that you want to build at least, and I even think this is a low number, it's a 6 to 12 month security fund. So if someone loses their job, they have 6 to 12 months of savings within their bank account. So the bank account, the best to put that kind of money in is like a money market account. And so you're looking to have that cash in case of a job loss, or something happening with someone's health or whatever, that you've got that cushion. And that is a great amount to have. If you can look at it either in terms of the bills, I want 6 to 12 months of my needs column. I'll eliminate my wants if I've lost my job, and at that point in time, I would not be saving. But it definitely is worth having that amount of cash on hand. And then you're going to go into, once you have that cash saved, then you go into additional types of savings. So you might have certain amount you're putting away for retirement with whatever that method is, 401ks, IRAs, things like that, or just you can in a bank or under your mattress, whatever people do. If you don't own a home and you're working to get that, you're looking to save a certain amount for your a down payment on a home, maybe, so that there, and then once you've accomplished the things you want to accomplish, then you might want to go to investments, and a good base investment is an index fund type of investment. So here, when you're looking at your savings, just as we divided, so this amount of savings, you can divide also into percentages and say, I'm going to have a bucket where 50% of my savings, which would be 10% in this category of your take-home pay, but 50% of that savings money would go to retirement. 50% would be to saving for whatever. I put a mortgage here, but let's say you're saving for a child's college education or whatever that might be. And then 25% into investments of some sort. And that would be a great place to, it would be good to talk to a financial advisor of some sort who is only a fiduciary, meaning their only responsibility is to you. It is not to the business or company that they are with. It is only the investment circumstances, only what is best for you. Before 2000, and they're all supposed to be functioning this way now. As of 2016, the Department of Labor said no more of investment firms acting on behalf of themselves. So believe it or not, they weren't doing everything in the best interest of the client. So the Labor Department said, no, now it's customer only, customer first. So by law, we're protected, but you still want to make sure that that investor is following the law and that they are acting in your interest only. So that's really, really important. Any questions about this? I know this is a little complex. So if you want to break it down more, yeah.
I noticed the list doesn't have a contingency for emergencies because sometimes the refrigerator croaks or the roof leaks or the car needs work.
Actually, that's what this is here too. So your 12-month security fund, so if you took your take-home pay times 12 and you save that, you have that savings, so you have not lost your job. You just have those sets of circumstances. You have this money in cash. But the idea then is, so then you're going to back off in order to replace that money. So let's just say your hot water heater goes out, and I can't remember what it costs to get a hot water heater, but let's just say it's $1,200. So now you're $1,200 down in this security fund. So you're going to back off, and you're not going to continue maybe to put 25% of the savings into the mortgage and into the investment. You're going to keep the retirement money going, but you're going to build back that security fund until you replace that $1,200. Then you go back to these buckets and make sure that these buckets continue to get filled every month. Does that answer your question?
Yes, thank you. Or maybe you could cut back on some of your wants.
Definitely. You can do it any way you want. You can cut
for a few weeks.
Right. But the point is when you need the money instantly, cutting back on your wants, right, that will replenish the money, yes. But when you need the money instantly, you want to have this security fund. Now, this is a minimum, I'm telling you here, is the 6 to 12 month security fund. You can build that up much larger if you feel more comfortable. Like say, for instance, somebody owns a new home and, appliances, everything is new, right? Their cars are on the newer side. They might not be as concerned about building up the security fund larger than someone who's in a 100-year-old home where things are need to be replaced more frequently. So you have to analyze that based on your circumstances. But yeah, you would either take the money to replace it from the wants or the savings buckets. So that's all this is. Think of each little box here as a bucket, right? And so sometimes those buckets fill easily and other times they don't. And yeah, because life happens. Good question. Anything else? I'll tell you, when you get this sheet, and you'll get the whole package. So when we complete, everything will go to Kathy, and she'll be able to distribute the link to you, and you can get into everything. But I would highly recommend passing some of this information along to, family members or friends. This expense sheet, it's been proven. I actually came across this in 2000 before the big crash, you know, and the economy. And, you know, my kids were either, you know, had finished college or whatever, and just starting out. And I sort of was trying to figure out a way, how do you help them get to where they need to be? And how do you make sure that they don't get into trouble, right? And so when we did all of this and we were figuring out their rent and all, and then looking at their take-home pay, I remember my daughter saying, well, Mom, but this doesn't work. I go, well, then add another roommate, right? I mean, there's a solution. They're not always the solutions we want, but this one method where you're using this form and the other expense form to do the tally, this keeps people on track. I've done this for, you know, been married for 40 years, and we've done this for 40 years. And in job losses and all sorts of illnesses and all the things that come with human life and that have happened in my personal life over those 40 years, this has kept us from drowning, and it has been the biggest godsend. And I didn't realize we were doing this until 2006. I happened to read this book. I was opening a new company, and I read this book, and it was like, this formula is the best way to explain it: 50-30-20. And this 50-30-20 formula, I remember when my daughter was getting married, or no, when my son-in-law was going to propose, actually, he came to me, and my husband, he's telling us this, and asking us, you know, about getting married. And I said, under one condition, you have to read this book that I just read with this 50-30-20, and promise me you'll follow this. So he read the book, and they're married over 10 years now, and they have followed this to the letter and have done beautifully, absolutely beautifully. So, and then when my daughter did it after college, and I got her all set up, all her friends were like, how did you figure this out? How do you know how to do this? So then all her friends got this 50-30-20 form, and were able to, and I have to say that all of those kids who aren't kids anymore, they're doing fantastic in their finances. So life got so overwhelming and complex in the United States. And I think that, you know, we made it so difficult, and we made records and documents and all the things we need to keep track of so hard. And this was the best way to bring it down into its simplest form, and make it so that under the circumstances, with the healthcare issues that we have in this country and all the other things and expenses that we're dealing with, the high cost of living, this keeps you on track, and it makes you live within your means, which is not easy. And it's not easy sometimes to accept some of the things that we have to give up, but it sure does show the true picture. And it keeps us from being an ostrich burying our head in the sand. So I think it's very, very valuable, very worthwhile. I've seen a lot of people thrive as a result of this. And then a month ago, I happened to find out who the author, I don't really remember authors of books that I read. And the author was Elizabeth Warren and her daughter. So I thought that was unbelievable that they had written this book on, you know, really how to budget and survive so well. So it was just a kind of a strange thing that a presidential candidate had written this type of book that was so beneficial to my family. And, you know, whether you like her politics or not, I certainly like the formula of the 50-30-20 in keeping your finances and your financial circumstances in order and in your control. So any comments there or questions?
Good.
Are we all set?
What was the name of the book, she asked?
You know, I don't even, I have to look it up. I'll put it, but yeah, if you just put, wait a minute. You know what I'll do? I'll Google it right now. I'll tell you, I read that whole book, and that formula was the most important thing I got out of that book. But let me see, Elizabeth Warren, 50, 30, 20. Let's see what it is. Well, okay, so the 50, 30, 20 budgeting rule is what it's called. Elizabeth Warren's budgeting system. Where's the book? Oh, let me just put book after that. And see what it's called. Oh, here it is. All Your Worth. It's $10 on Amazon. Yeah, but that was yeah. So this form is a translation of, you know, what I got out of that book. And I'll share again. I noticed some people came in late. So yeah. So this is what came out of her. But that, yeah, the 50, 30, 20 budgeting rule is really the way to stay on task. Oh, and here, I think, do I have? Yeah, look, this is where I started out with my daughter. This is really old. So we had to look at parking the car and her rent. We had to look at 30% of her take home. And yeah, so it was funny how this was the start of her very first budget. All right. Any other questions?
I don't have any.
Okay. I'm going to stop.